opinion on the financial statements. Is everybody with me? All good, everyone? Right? Financial statements. Financial statements means what? Balance sheet, statement of profit and loss, cash flow statement, SOCE, right? And the summary of significant accounting policies and the other explanatory information. Now, these financial statements, this yesterday we saw Reliance Industries also, their balance sheet P&L. Obviously, these figures in the financial statements are coming from the schedules. And you have the schedules given in the notes to account, like PP, schedule, debtors, trade payables and other current liability, the breakup given. Then the schedule, these figures are coming from the trial balance. Wonderful. They are coming from the trial balance. In the trial balance, these figures are coming from the, where are they coming? Dropping from the sky? No, wonderful. Very good students. They are coming from the ledger. In the ledgers, they are coming from the they are coming from the, yes, the journal entry. That is your primary books of account, and your journal entries, right? It's coming from the journal, right? And in the journal, it is coming from books of prime entry. Journal, I can also call it as the books of prime entry, or which I can also call it as the books of account. Where is it coming in the books of account from? From where? Is it again dropping from the sky? Or, coming like a, what do you say? Yes, coming from under the surface of the earth. Yes, it's coming from the invoice. It's coming from the source documents. It's coming from the memos and bills. That means, let me call it as, it is coming from the supporting document. And do you know what can you also call a supporting document as? Yes, it is also coming from the, starting with V. You know that word? Yes, exactly. It's coming from the voucher. And a voucher. And a voucher. Okay. Now, see, so now, if these financial statements which are being prepared, are you getting the drill down? Okay, they are prepared on the basis of schedule. Schedule from the TB, TB from the ledger, ledger from the books of prime entry, and books of prime entry to supporting documents and voucher. So ideally, when these financial statements are being prepared by the management, am I right with my sentence? That financial statements are being prepared by the management, because it is the management's responsibility. It is the client's responsibility. Should they agree with the books of account? And do you think that the financial statements, should they be in agreement with the books of account? That in books of account, the revenue of the company is 200 crore. So even in the financial statements, the revenue should be 200 crore. Yes, only then only it has to be in agreement with the books of account. In reality, many company management, in order to prepare the financial statements, they say, we don't require the books of account. You know what is BOA? It is books of account. Ideal situation, what is it? Okay, if company wants to prepare financial statements, it should be prepared on the basis of the underlying books of account. But creative management, they say, no, why are you giving books of account and all? Not required, you keep it with you. Hey, why are you giving all this? You just tell me two things, how much profit you want to show and how much tax you want to pay, and we will prepare the financial statements accordingly. And they say, why are you giving books of account and all? No, not required. And we will prepare. You just tell us. Now see, how the management will prepare financial statements. I'm just giving an example. If they want a subsidy from the government, a subsidy, so they have to show that they are a very, a subsidy, please give water. Then what they have to show? That they are a sick unit, that they are a loss-making company, that they are doing very bad. And on the other hand, the same company management, if they want a loan from the bank, if you want a subsidy from the government, you have to show that you are a sick unit. What did you say? Like that. You have to show that you are a loss-making company. But if you want a loan from the bank, 1,000 crore loan you want from the bank, then you have to show that you are a profit-making company. You understand? No, if anybody is telling you, okay, what are you doing right now? And then you say, oh, if you're not doing anything, then study now. How are you roaming here and there? So you say, no, today little stomach is paining, little headache is happening, some problem. And then if I tell you, okay, what are you doing today? Come, let's go for a movie. So then you say, oh, yeah, actually, I'm working very hard. I think I deserve to see a movie. You're right, I can do this other work later on. I'll come. My God, what a chameleon. You know chameleon? How change of color? The moment you tell study, then stomach is paining. The moment you say movie, okay, all fine, you deserve it. You understand? So now, obviously, there should be no chameleon colors. There have to be the true colors. Whatever is the reality of the company, that should be reflected. If honestly they have a revenue or a profit of 12,000 crore, that should be shown. If honestly they have a loss of 4,000 crore, that should be reflected. You understand now? Honest picture of the financial performance of the company should be reflected. So many company management, they don't require only the books of account to prepare financial statements. They say just tell us two things: how much profit and tax, we will prepare and give it to you. Obviously, will such books of account or financial statements be considered to be giving the correct picture of the financial performance of the company or the financial status of the company? No. Right, so very, very important that these financial statements which are being audited by the auditor and in which auditor is putting a signature saying that we have audited the financial statements and giving the signature, right? These financial statements which have been audited, should they be misleading anybody? Should they mislead in all the gift, to shareholders and investors? Should all of them get misleaded? Should they get misleaded? Should they be misleading the financial statements which have been audited by the CA, by the auditor? No, they should not be misleading anybody. And they should not be misleading anybody. They should be leading, giving the correct picture of the company and not giving the incorrect image about the company. Right? The incorrect image about the company. So as auditor, when I am doing the audit of the financial statements, what I have to check that these financial statements do not mislead anybody. And how can I check that these financial statements are not misleading anybody? It says I tell you how to check whether the financial statements are not misleading anybody. Okay, whatever entries are made in the books of account, the financial statement should be prepared based on the entries in the books of account. So you cannot prepare the financial statements, in your own dream and imaginative world. It says financial statement should be prepared based on the entries in the books of account. Do you agree with point number 1? Financial statement should be prepared based on the entries in the books of account. Right. Then these entries which have been made in the books of account should be supported by the sufficient appropriate evidence. So, from where did you get this purchase entry, sale entry? Is it a bogus journal entry? Is it a fictitious journal entry? It is just, an entry passed to, increase the sales of the company or under record the expenses of the company. So one financial statement should be prepared based on the entries in the books. These entries in the book should be supported by the underlying documents. Then none of the entries which are there in the book should be omitted. That there are few provisions, liabilities on the company, and these liabilities have not been recorded only. Right, so none of the entries in the books have been omitted, or nothing which is not there in the books has found its place in the financial statements. Okay, there is no other income of the company, but unnecessarily you're saying in the financial statements that there is 20 crore other income of the company. Right, so none of the entries what is there in the books should not be omitted to be given in the financial statements, and what is not there in the books, that should not be included in the financial statements. So what is there in the books? You have some liabilities to pay. These liabilities, have you recorded in financial statements? No. Or in the books of account, there is no other income of the company. But in the financial statements, you've shown the 20 crore other income of the company. Which is there in the financial statements, it should, in the books of account, it should not be omitted in the financial statements, and nothing which is not there in the books of account should be included in the financial statements. Do you understand?